Joining us now to talk all things capital markets as we wrap up 2020 is Elizabeth Crain. She is the Chief Operating Officer over at Moelis & Company. Elizabeth, great to talk with you this morning. I'd love to begin by just talking about how you are seeing the year 2020, what the meetings have been like through each quarter with your clients, and sort of how surprised you are that we are kind of sitting where we are today, given how things looked at the end of Q1.
Well, good morning. I'm so pleased to join you this morning. You're right. It's been an unbelievable year. And as you think about where we are, certainly from an M&A and capital market standpoint today relative to the last couple of quarters, it's been quite eventful. As we all know, first quarter was very active. And then from an M&A standpoint, business pretty much shut down in that second quarter and then began to resume over the summer with a focus on companies that benefited from the stay-at-home economy, more COVID resilient. And now we are seeing activity much more widespread across virtually every sector and led by both strategic and financial sponsors. And particularly at this moment in time, we're seeing tremendous activity in what we call that power middle, companies with a market cap between 500 million and 4 billion.
Elizabeth, it's Julie here. It's great to talk to you and get your perspective on all of this. Motivation-wise, where are a lot of these deals coming from? In other words, is it from an area of strength or an area of weakness in more cases, would you say?
I think it's a little bit of both. And there is certainly this desire on the part of so many companies to accelerate business transition. And that transition may have been planned. It may have been underway. It could be something they contemplated over the next couple of years. But this environment seems to be almost a catalyst for transformation. We've seen how quickly things can change. And companies are looking to M&A to position them faster, to respond to this environment and faster to be competitive in the future. So I actually think it's a little bit of both defensive and offensive is what we're seeing.
Elizabeth, do you think we'll see next year more radical transformations? And I'm already starting to see this to close out this year. S&P Global spent $44 billion to buy IHS. You have Tilray and Afria joining forces this morning. These are, at least to me, pretty big deals that fundamentally changes two companies. And it's not just them at this point.
Absolutely. And I think that plays into that theme of transformation. I think we're seeing it. I think we're seeing that acceleration of it across so many industries. And that was underway pre-COVID. That intersection of technology and any traditional industry is where we were spending a considerable amount of time advising our clients. This environment is accelerating that. There's no doubt about it.
And do you think the fact that we are seeing rates where they are, I mean, presumably that's also a contributing factor. But do you think that there are deals happening that shouldn't happen? I don't know from your perspective if there are ever deals that shouldn't happen, because it's good for you guys, the more deals that happen. But do you think there, just as we are having discussions here pretty regularly about, are things overvalued in stocks right now? Are there too many crazy IPOs? What about in deals?
I think what we're seeing is actually greater confidence. And so, when you think about the components of what drives M&A, availability of capital, interest rates, but importantly, executive board confidence to undertake a transaction. And as we have come into the last quarter of the year, this fall, that confidence level has definitely increased. Companies, including financial sponsors, as they're looking at acquisitions, there's greater confidence in the outlook for 21, 22, that ability to predict or see line of sight, underwrite a business model and transact based on that confidence in line of sight into how an asset might perform. So we think that work it's underway and it's not it is. I would attribute it much more to confidence in the outlook for these businesses at this point in time.
Speaking of that outlook, Elizabeth, I want to circle back to something you mentioned at the beginning, which is that power middle, that $1 to $5 billion type acquisition. I mean, this sounds to me like a conversation we would have had 2017, 2018, private equity, capital on the sidelines. Look at all these deals they want to do. I mean, in some ways, are we continuing simply that theme after kind of a pause for I guess the rate hikes in 18, and then, pause for the pandemic.
I do think that is a continued theme. And when you look at the amount of capital that private equity has to deploy, globally, it's about $2.5 trillion. It's significant capital. And so that theme is underway. But the added aspect to that is that coming back to this confidence, private equity potentially was certainly less confident in Q2 and over the summer as they look towards the future at broader industry opportunities. They are confident in what they're seeing in terms of business models as we head into 21, 22. I think the other thing that we're seeing is this idea that there is that we will see, I should say, this idea that there's this pent up demand. I mean, as an individual society, there are so many activities, experiences, products that we're not undertaking right now. And that will be, I believe, another accelerant of M&A activity. And I'd look to private equity to have their eyes on those opportunities and be in front of those opportunities with a confidence level that they can, that we're seeing the other side of this environment, if you will.
Elizabeth, do you think SPACs, what we've been seeing, is that activity good for the market? Certainly the argument could be made, these companies that are coming public via SPAC, they're receiving less scrutiny as opposed to if they would undergo the traditional IPO process.
Well, I think we believe SPACs are a alternative vehicle for a company to go public. So if a company is ready, if they're prepared, a SPAC, listing through a SPAC can really shorten that time frame to launch, to be public. And it is, we believe, a permanent sort of alternative. That doesn't mean, IPOs are very much, and we're seeing it in this market, an important means for a company to list, but SPACs are a very attractive alternative. And I think what's also interesting about SPACs is for a management team that's considering a listing of IPO through a SPAC, the initial partnership, if you will, access to the experience level of the SPAC executive team or even of the sponsors can really be an interesting and added and valuable complement in those early days of being public through a SPAC. And I don't think you get that through a traditional IPO.
Yeah, and that's perhaps an angle that we don't talk often enough about. Elizabeth, finally, I wanted to ask you about a change that you all have made at your firm. Ken Moelis, the CEO, recently told Bloomberg, people who work for Moelis can live wherever they want. And so I'm curious, I don't know how recent that sort of allowance is, but I'm curious what the take-up has been on that. I mean, you guys, have over 800 employees, I believe. Are people moving all over the place?
So, in this environment, we, our most important asset is our talent, our people. And we have wanted to provide as much flexibility for our bankers to work anywhere and any way that they want to in this environment. And at the same time, what we're seeing is we are seeing our clients. Clients are moving to certain locations. We already have 6 offices in the U.S. I would expect in the next couple of years, we may have a few more. And there's going to be a business imperative to have those offices near where our clients are located. That will provide greater flexibility to our employees. I don't doubt, though, that we believe employees will continue to come to the office. There is a learning, a process of development, culture, that virtuous cycle that happens when people are physically in the room. And even though so much is being done in a virtual environment, it's still different when you're face to face. And there's real value in that. So we're going to take the best of what we learned in this environment. I am confident we will have a flexibility in how and where we work in the future, but we also believe that individuals are going to keep coming into offices and conduct business in offices in the future. It just may look a little different.
Certainly with the weather we have moving in today here in New York, it's nice to not have to leave the house. But I think we all wish, certainly the 3 of us here at Yahoo, wish we could be all in one place. All right, Elizabeth Crain is the Chief Operating Officer at Moelis & Company. Elizabeth, great to speak with you this morning. Have a great holiday, great New Year, and hopefully we can talk face to face sometime in 2021.
I look forward to that. Thank you for having me this morning.